The following hedge fund video has been brought to you by the HFG. The hedge fund group provides premium service, along with online training and certification for hedge funds, called the Certified Hedge Fund Professional, also known as the CHP designation.
Hello, this is Richard Wilson, and welcome to this video. We're going to be talking today on the top 4 industry trends. Since we started our hedge fund consulting and media firm 2 years ago, we've sent and received over 800,000 emails, worked with over 1,000 hedge fund managers, and one thing that's given us is a lot of perspective on trends in the industry. We write daily on hedgefundblogger.com and try to pick through news items and different trends we're seeing in the industry and interviews we've done and share them with the industry. And we just wanted to share what we see as the top 4 trends right now. If you're a hedge fund consultant, service provider, a hedge fund manager, or looking to work in the industry, this could be information which can make your business more profitable or advance your career much more quickly by positioning yourself as one of the people who's on top of these trends or who understands it and has taken advantage of what's about to happen or what is happening. So now let's get started here. The first trend is that due to fraud in the news related to hedge funds, some poor performance, and some unclear hedge fund policies on gating clauses, etc., the importance of transparency and governance has never been higher. Those firms which can be very proactive in being transparent and having great governance will have an advantage. If you're looking to interview with a hedge fund, if you can become somewhat of an expert on transparency, 50 ways a hedge fund can become more transparent, or 20 things that should be in place for have very strong governance. That's a huge advantage. If you're a hedge fund manager and you're very proactive on being transparent, doing monthly reporting or weekly reporting on various aspects related to risk or your operations, or you're very advanced and have best practices in place for governance, that's a huge advantage because most professionals, most hedge fund managers don't mention these things when they market their hedge funds. Those that do are not always doing them well, and if you can consistently be proactively ahead of the curve in these 2 areas, it'll be a huge return on your investment of time and money. And so I see this as a growing trend and a place where managers with less than $1 billion under management can put these things into place without having to spend $20 million in infrastructure or on certain software or technology. These things can be put in place for relatively low amounts of capital. So those are 2 very important trends. Another important trend right now is multi-prime brokerage. I don't know of many hedge funds with over $100 million that do not work with 3 or more prime brokers. And now what hedge funds are doing is once they get past $5 million in assets, they're putting $1 to $2 million or $3 million with a second prime brokerage firm. And after they get past $30 million, most that I've been speaking to are looking to place some assets with a third prime broker. There definitely is a large push by prime brokers to retain more assets and more hedge fund managers. So hedge fund managers are sometimes leery to change prime brokers, but there definitely is a trend of a multi-prime brokerage model. Technology companies I speak to are seeing a lot of popularity within their multi-prime technology platforms, and the prime brokers I'm speaking to admit that they're often working alongside competitors when serving their clients. The third trend that we're seeing here is the use of outside capital raising resources. Most hedge funds have trouble raising the amount of capital they would like to raise, and almost everybody would like to be managing more capital. So the use of investor databases, third-party marketing, and external capital raising consultants is on the rise. If the hedge fund industry is based on competitive knowledge, and we are knowledge workers, and time is money because the faster we work, the more capital we can raise, the more risk we can manage, the more solid investment decisions we can make, then it just comes natural that if you can hire an expert in marketing to help you move up that learning curve faster, it's going to save you money and add value to your firm long term. Or if you instead of spending 300 hours yourself completing your own database of investors, you go to an investor database company and you buy a few investor databases. If that saves you 200 hours, then you might have just saved yourself $20,000 or $15,000. And this is one area that I think will only rise because not only is the hedge fund industry becoming more competitive, but other industries such as commercial real estate, cash management, traditional fund management, they're all becoming more competitive. And what that means is that one investor, like a wealth management firm, like say GenSpring Wealth Management, a very large wealth management firm, they're getting hit from all sides more often. So it's really exponentially growing the number of inputs they have to them, which means you need to get to your investors faster in multiple modalities, multiple types of marketing materials. You need to be sending them things in the mail, over phone, over email, and you need to be reaching deeper in the market, maybe going after some investors which aren't brand name investors, which are being sought after by 10,000 different investment companies a year for capital. So because of all those factors, these capital raising tools are becoming much more important. If you'd like to learn more about third-party marketing, we have a free blog with over 200 resources at thirdpartymarketing.com, and we have some databases at investordatabases.com. The fourth trend, which is really growing and is more all-encompassing and probably more important than any of these others, is that investors want an institutional quality firm. They want to have the operations, the risk management, the research, the pedigree of $1 billion plus firm in a much smaller structure. So, to meet that need, what's happening is hedge fund managers are hiring independent administration firms, hiring capital raising experts, they're hiring technology firms to put into place best practice infrastructure, reporting, and transparency. This relates to the first trend on transparency and governance, but it's much wider. Being institutional quality means having the right professionals on the team with the right experience and talent, having the right type of service partners, which appear to be institutional quality and are institutional quality. And it's really important that a fund manager nowadays promotes themselves and has all the things in place that show tangible evidence of being an institutional quality firm on a proactive basis, because everybody would like to have these things in place, but hardly anyone does. And so if you have these in place even before the investor asks for it, or when the investor asks for something such as a compliance report, you have it and can send it within a half hour, that's institutional quality response, and they can feel that and it'll be obvious. Whereas if you don't have these things in place or can't produce them, that'll also be obvious. But it's just a growing trend that the decision on whether an investor invests or not is more and more being based on this institutional quality factor than it is on track record or team alone or transparency and governance. Lots of it is really about the institutional quality of the firm. So I hope these four trends help you understand things that are developing in the industry, ways you can position your service provider firm, ways you can position your hedge fund, or ways you can position yourself and your knowledge in the hedge fund industry. So thank you for your time and joining us here today.